带动股市上涨的时间轴，大约是从2022年底 ChatGPT 问世后不到3个月就引爆的。当时 OpenAI 推出 ChatGPT 让世界惊艳，它能对话，能写程式，甚至能协助撰写论文和企划，替人类世界打开了一扇意想不到的大门。但真正掀起全球震撼，引发集体恐慌与兴奋的是几周后的一张照片。2023年3月，一张叫宗穿白色羽绒衣的 AI 生成影像在网络疯传，许多人以为那是真实照片，后来才发现它不是摄影作品，而是人工智慧生成的影像。从那一刻起，人类第一次意识到 AI 不只会生成文字，它还可以建构影像内容。而让这一切从科幻走向真实的关键就是算力。当时 ChatGPT 背后使用的是辉达的 GPU， 这些 GPU 是当时全球唯一能同时支撑大规模模型训练与推理的硬体，加上 CUDA 软体生态的封闭优势，让辉达成为生成式 AI 崛起的最大受益者。这股热潮直接反映在股价上，辉达股价从2022年10月约112美元一路飙升，台积电、三星、SK 海力士等晶片大厂也都全线走高，资本市场的情绪瞬间被引爆，各国都在争夺 GPU 产能。不到1年的时间里 ，AI 成为全球最热门的投资叙事。世界相信，只要沾上 AI， 就能预见未来。然而，到了2025年下半年，市场气氛变了，云端巨头开始缩减采购，投资情绪急转直下。究竟是谁让 AI 泡沫了？
I think we probably are in an AI bubble of some sort. The question is it going to burst? Is there going to be a so-called correction? Meaning, it's not so much that there's this huge drop in the market, 20% drop in share prices for the big tech companies, millions of people lose their jobs. This would be a little bit more like the 2008 financial crisis. I don't think we'll necessarily get to that point. And the reason for that is so much of the AI boom has been financed by large tech companies that are extremely well capitalized. They have tons of money on their balance sheets. Meta, for example, made more than $60 billion last year net profit. Google made even more. These companies, in theory, can afford a lot of this, but not all of it.
Michael Berry, the man behind the big short of 2008, is back again. And this time he's betting against the AI boom, shorting two of the hottest stocks in the market, Nvidia and Palantir. Now, Barry's Cyan Asset Management bought put options worth almost $1.1 billion combined, around $912 million against Palantir and $187 million against Nvidia, which is around 80% of its portfolio. These puts giving profits if these stock prices fall. Now, Barry believes the AI trade has turned into a bubble just like dot-com mania in 2000. Nvidia's valuations are sky high and Palantir, though profitable, is being priced to perfection. He's warning investors that the hype could burst at any time.
We now have an industry where the computation necessary to produce something that's really valuable and in high demand is quite substantial. We have created an industry that requires factories. It's never happened before, where the computer is actually part of a factory. And so we need hundreds of billions of dollars of these factories in order to serve the trillions of dollars of industries that sits on top of intelligence. You know, you come back and take a look at software in the past. Software in the past they're software tools. They're used by people. For the first time, AI is intelligence that augments people. And so it addresses labor, it addresses work, it does work.
So you're saying, no, this is not a bubble?
I think we're well in the beginning of the build-out of intelligence. And the fact of the matter is most people still don't use AI today.
From Nikkei to NASDAQ. Since the beginning of the year, the most important stock indexes have risen up to a fifth in value. Why? All the hype surrounding artificial intelligence. Shares in large US tech companies in particular are skyrocketing, fueled by hopes that AI will revolutionize the world. NVIDIA, the leading chip manufacturer for the AI boom, is the first company in the world to reach a market value of $5 trillion, making it more valuable than Apple and Microsoft. Mark Zuckerberg's Meta is also reporting record revenues. However, profits for the parent company of Facebook and Instagram recently plummeted by 83%. Experts are already cautious about a bubble like the one at the turn of the millennium, when the internet took the markets by storm. And once again, prices are rising faster than the real economy can keep up.
Questions are being raised about the rapid growth of the AI sector. Some see a strong demand in artificial intelligence and technology. Others are concerned that we are in a bubble that will eventually burst.
It is a bubble. The question is, when will the bubble pop? So the valuations just don't make sense in terms of the income that these companies are making and the enormous amounts of infrastructure that they require. It's just not economically sensible. It's all driven by hype and a kind of belief in a kind of false god of artificial general intelligence that could do anything, but is actually pretty far from what we know how to make right now.
For 2 straight years, the Valley's champagne never stopped fizzling. Startups minted a lot of money, valuations skyrocketed, there were billion-dollar announcements every week. Then suddenly, things began looking a little shaky. The fizz gave way to froth. And last week, global markets plunged. $730 billion were lost in a day. $730 billion in one day. The Nasdaq went down. Asian markets were in the red. It looked like investors had finally taken off their rose-tinted glasses.
So I was taking a look at history because a lot of parallels are being made, a lot of comparisons with the internet bubble of the late 1990s, right, Marty? And actually, as that bubble kept on inflating, there were a number of corrections, and corrections are healthy and normal. So what these bank CEOs are warning about, actually could be a healthy development to take some heat out of the AI stocks. So like back in 1998, I think there was a correction, actually almost a bear market drop of about 19%. So this kind of thing isn't out of the ordinary, and we could see some corrections while the AI bubble, or call it what you like, continues to inflate before it tops out.
Yeah, indeed. We've got a lot of people saying the same thing, right? David Solomon, Goldman Sachs, Ted Pick over at Morgan Stanley, the co-CIOs, Greg Jansen included at Bridgewater, saying the same thing. We're looking at a bubble, and you're right. Most of the most of the comparisons are to the .com bubble. But Michael Burry, I want to get back to him. That surfer dude stock savant who's just resurfaced after being missing for 2-3 years or so, suddenly back on X. Saying that, look, hey, we see bubbles. And the parallel he's drawing is, of course, to what he's famous for, calling the 07-08 great financial crisis related to the real estate market in the U.S. So, he's got a bit of a track record. Doesn't mean he's right this time around on AI, but he was right back then when everybody else thought he was crazy.
Well, look, we think the market is overdue a correction, and therefore, this week, next week, we could easily see the market go down another 2 or 3%, get to that 50-day moving average, and perhaps even below. Our sense is that going into the end of the year, the market will continue to do well, but we do think a correction is overdue. Trees don't grow to the skies, etc. There's a lot of stocks that may be slightly in bubble territory, valuations that are extreme. But I think one thing investors need to keep in mind is that innovation bull markets, and this is definitely one of them, tend to last longer and valuations go higher than people expect. Why is that the case? Because an innovation-driven bull market, unlike a cyclical or liquidity or recovery from recession type of bull market, fundamentally, you are adding earnings and productivity in infrastructure investment to the economy. And that's very powerful. It doesn't mean it doesn't go through fits and starts and have volatility, but these innovation-driven bull markets, as I said, tend to have further upside than investors expect. And that's our sense here.
就像人类社会的每次进步一样，新的改变总是在期待与质疑声中前行，并不断修正。支撑这股 AI 热潮的，当然是对新时代的憧憬。但真正把 AI 泡泡推向破裂边缘的，是来自3股力量的拉扯：资金狂潮、基建落后以及过快的应用期待。首先是资金拉扯。根据报道，2024年仅4大科技巨头亚马逊、微软、Meta 与 Google 在人工智慧相关领域的投资就高达约2410亿美元， 相当于当年美国 GDP 的 0.8%。到了2025年第二季度，这些企业的资本支出进一步攀升至约970亿美元，约占同期美国 GDP 的 1.28%。若按照这种支出速度持续到2025年底，规模将超越多个历史性投资热潮的峰值，包括 NASA 在阿波罗计划的投入，以及1990年代网际网络与宽频建设的高峰。尽管如此，这仍不是美国史上最大的投资潮，但若从二战以后的现代历史来看，这波围绕人工智慧的投资已是规模最大、速度最快的一次资金集中。其次是来自基础建设的拉扯，电力供应、土地取得、冷却技术与网络带宽，这些支撑 AI 发展的地面工程，其实远不如想象做得完善。根据绿色和平组织统计，仅 ChatGPT 每天的耗电量就高达290万度，相当于约10万户美国家庭的日用电量。这还不包含工厂导入 AI 系统与其他应用程式所需的能耗。AI 吃电的现象各国皆知，但电力瓶颈至今仍难以解决。即使晶片供应充足，资料中心土地取得顺利，没有电，一切都无法运作。这也是许多分析师担忧的根源。估值与实际效益之间出现越来越明显的落差。另外是应用期待的拉扯，许多新创公司与大型科技企业将只要挂上 AI 标签就能爆发当作策略，但现实世界的商业变现是需要时间的。根据财新杂志刊登的一篇由耶鲁大学管理学院教授撰写的分析文章指出，2025年上半年，美国近2/3的风险投资流向人工智慧与机器学习新创公司，高于2023年的 23%。但这些企业中究竟有多少已转化为可持续的收益，仍是未知数。当资金疯狂涌入，基建却尚未完善，回报又遥遥无期， AI 自然被推向最脆弱也最具风险的位置。
The last big tech bubble burst at the start of this century, and we may be heading that way again.
The kind of investment wave in AI we've seen is like probably nothing ever before in history.
Hundreds of billions of dollars are being spent on automating workplaces.
We have this amazing technology. However, we're not seeing adoption fully yet in every pocket of the economy.
Only 1% of CEOs have a fully formed AI strategy. With such high stakes, will businesses see a return on investment?
This is the biggest tech spending trend we've seen in the last 40, 50 years. There's a view that it typically ends a CapEx cycle after 2 to 3 years. The super cycle means that this could go on not just 2 to 3 years, 5, 7, 10 years. That's why by definition it's really an AI tech super cycle.
The artificial intelligence industry is experiencing unprecedented growth, with companies investing hundreds of billions of dollars in infrastructure. But a troubling pattern is emerging that has analysts warning of a potential bubble. The concern centers on what experts call circular deals, a web of interconnected investments where the same money appears to flow in a loop between a handful of powerful companies. On the surface, OpenAI appears to be riding a wave of massive investment and explosive growth. Billion-dollar deals, partnerships with tech giants. But look closer, and a troubling pattern emerges. Here's how it works. Microsoft has invested roughly $13 billion into OpenAI. That makes them OpenAI's largest backer. But Microsoft isn't just an investor. They're also OpenAI's biggest customer and their primary cloud infrastructure provider through Azure. So the money Microsoft invests? A significant portion flows right back to Microsoft as OpenAI pays for cloud computing services. This is just the beginning of the loop. Now, let's add more players to this puzzle. SoftBank invests in OpenAI. OpenAI then spends money with NVIDIA for chips and computing power. SoftBank? They have deep ties with NVIDIA too. NVIDIA invests up to $100 billion in OpenAI. OpenAI uses that money to buy computing power from Oracle, which spends about $40 billion purchasing chips from NVIDIA. Meanwhile, NVIDIA also holds stakes in CoreWeave, a cloud computing company that provides AI infrastructure to OpenAI. And the circle continues. Each company wears multiple hats: investor, supplier, customer, and partner, often simultaneously. In October, OpenAI announced another major deal with AMD, NVIDIA's direct competitor, potentially taking a 10% stake in the chipmaker in exchange for purchasing their chips. These partnerships involve staggering sums. Oracle and OpenAI have committed over $3 billion over 5 years as part of the Stargate project, a $500 billion infrastructure initiative also backed by Japan's SoftBank. NVIDIA itself has grown to a market valuation of $4.5 trillion, largely on the strength of AI chip sales. Together, these deals have helped push U.S. stock indexes to record highs. But analysts are increasingly concerned that this circular flow of capital creates what one called a mirage of growth.
Yeah, markets in the U.S. are again these days flirting with record highs. It's been a banner 2025 on Wall Street. But a closer look shows how money has continued to gravitate towards just 10 companies. Traditionally, the top companies take, more than a quarter of the U.S. stock market, but now it's closer to 40%. The top 9 of those companies are tech-related. Reina Stambuliska, what does that tell you?
Well, it tells a lot of things, not just about capital flows, but also about redistribution of power, and if you like, more broadly, how whatever we are producing, the growth that technology enables, flows or doesn't towards a broader public, right? Because your picture, your graphic is really telling. So this is what it tells us. And what is worrisome here is that this huge accumulation of resources is prompted, but also creates a vicious circle of collecting and not redistributing resources and also gains. That's
so like a black hole for wealth?
In a way. I mean, I'm not a the theoretical physicist specialist, but it sounds like an extractive institution, as Darren Acemoglu described in his Why Nations Fail, where you basically concentrate resources and gains within a very limited elite circle, and you don't redistribute, you don't include others in that sort of benefits, right?
Do you agree with that, Leila Merch?
I mean, I agree with that. This is true. This is also how the economy has been working more and more over the past decades. It's like, is it that surprising? This is where I'm like, for me, it's not that surprising. This is how the tech industry has shaped the entire VC landscape over the past dozens of years, and now it's just kind of like getting into the public eye. The question for me is...
Getting back to that graph, 38% of all the money of the 500 companies that are listed in the S&P 500 are with just 10 companies, and 9 of them are tech.
Yeah, well, 9 of them are tech, and most of them are just this huge giant that we've never seen before in the history of humanity. But it's also because in the history of humanity, we never seen that many millions of people using the exact same tools, doing the exact same thing. Like the fact that humanity is getting more and more homogeneous in how they use, how they buy, how they do things, it also leads to kind of like putting all the money in a few companies that delivers those products. You think about Amazon, you think about Apple. We never had that before. And so now I believe that the main question is around...
In the days of railroad companies, in the days of big oil, that didn't exist?
Well, was it only one company for the entire world? You see, this is where for me it differs a bit. Of course, we always had the same way to build, but not at the exact same time, not with the exact same companies. And this is where, for me, I agree with what you're saying. I'm just saying, are we that surprised? And how can we act on that? And what does that mean for the consumers? And what does that mean for the economy? And what does that mean for the bubble?
Global AI spending will top more than $330 billion in 2025 and $500 billion by the end of 2026. And by 2030, it could take about $2 trillion a year to support the infrastructure being built today. That's more than Amazon, Apple, Microsoft, Meta, Nvidia, and Google's parent company Alphabet made combined in revenue in 2024.
It's the start of trillions being spent in this build-out of the fourth industrial revolution. Big tech right now is doing the equivalent of building Vegas in the 1950s, where there was just sand. Dubai 30 years ago. That's what's happening with this AI infrastructure build out. From the chips to the data centers to the grid, you're really building out the future economy for consumers and enterprises.
But some investors are worried where this is headed.
The concerns about AI spending here harken back to the dot-com bubble in the late 90s. The parallel is that it's money going into somewhat unproven technology and wondering if you end up with just wasted money.
At the same time, this explosion of AI spending may be masking other weaknesses in the economy. A September 2025 Deutsche Bank analysis argued that without AI-driven investment, the U.S. might already be in a recession.
GDP is being driven by all this investment. Earnings growth is being driven by all this investment. Yeah, it's pretty unbalanced right now, and that does create a vulnerability to an investment bust.
Still, others see AI as the next productivity boom and potentially America's best shot at growth.
Will there be bumps along the road? Yeah, but I don't fear that this is too big to fail, given it's propped up by tech, $1 trillion on the balance sheet, generating another $300 to $400 billion in cash a year.
So is AI infrastructure spending masking a weak economy? And what happens if that spending slows?
If you ever fly to Washington, D.C., look out of the window as you land at Dulles Airport and you might snatch a glimpse of the single biggest story in economics right now. Those big buildings may look like warehouses, but what they are actually is data centers, the biggest concentration of them anywhere in the world. Artificial intelligence might be a bubble, more on that later, but for the time being, it's creating a boom, a massive boom you can see in plain sight down at ground level. Because if you want more AI, you need more data centers, big buildings containing big computers that do the calculations to train and run the models you might sometimes use. And here, in Loudoun County, there are more data centers than anywhere else on the planet.
And from the outside, they kind of just look like any other buildings, or like a big flat kind of distribution centre, the kind of thing you sometimes see on the side of the motorway in the UK. But all of this around here, these are all service centres, they're all data centres, basically as far as you can see.
Access to these service centres is very rare, but Sky News has been given permission to see inside one of them in the heart of Data Centre Alley.
So the whole building is a data center, but each of these is data halls, are
Correct.
They?
Yep.
And so within each of these areas, you've got different customers that have their own, all of their servers in there.
Yeah. So you could have, this room could be a single customer, or it could be multiple customers that have bought different size spaces within that.
This building is run by Digital Realty. You might not have heard of them, but they are one of the biggest data center companies in the world, running servers that power nearly all the major AI and cloud services anywhere.
The fingerprint sensor as well?
Yes, sir.
Wow.
Multi-factor authentication.
Yeah.
What you're seeing here is a very special room, a place those AI companies visit to see how their server racks can plug into a site like this.
From here, the customer has control. Under the floor and beyond, we have the controls.
So power and cooling are the two key kind of...
Yeah, they go hand in hand. Power generates heat. I need to be able to reduce that heat by cooling.
It's not for nothing that these days AI capacity is measured in megawatts and gigawatts. This is all about power. A single one of these racks can suck up more power than a small village.
Now, when you think about things like AI, you're probably not necessarily thinking about the physical underpinnings, but
it is a very physical thing. When, AI is training, when you're asking it questions, it's going to servers like this. In fact, that there is the GPU, so that's where the heavy thinking happens. You can see it's an NVIDIA GPU, and then you've got the storage, and then you've got all of the other parts of this entire cabinet. And the striking thing, when you look at these cabinets, is just how much they need when it comes to power, just how much they need when it comes to cooling. And you see the cooling here, because beneath the floor, there are all of these pipes, supply and return pipes, each of which is plugged directly into the GPU to pass coolant around to make sure that these incredibly high temperature operations don't damage the chips. It is an extremely complex, energy-intensive operation, but this is what it takes to power the future.
Well, it's the pure build-out is something that we have never seen before outside of prior bubbles. So just for reference, we have 50 gigawatts of power in the US that's supplying the AI data centers right now, and we're going to double or triple it in the next 5 years.
Wow.
It will consume somewhere between 13 and 15% of the nation's energy.
How much? 13
to 15% of the nation's power.
And what does that do to the electricity bill? One asks.
Satya said the other day on a podcast that they have the chips, but they don't have the power. Right now, we're seeing in areas like Northern Virginia, where there are a lot of data centers, retail prices for electricity go up. So that's something I think we'll see a backlash from consumers when they realize that they're competing with a data center that's consuming its power, but has nothing to do with the local area.
And that kind of goes to the issue, that power issue, Brad, has been one of the key issues, because a lot of these folks that are these hyperscalers that are funding some of this construction of some of these data centers are saying, we're going to have our own electricity, our own power. And you're talking about maybe modular nuclear power. I don't know where it's going to come from. But that seems to be the gating issue at this point.
Right.